What's up, guys? This is Manoj Shuptani. I welcome you all on behalf of the Edupedia world. It's been a fantastic morning outside, and I'm sure that you guys must be enjoying your life to the fullest, guys. This is going to be the second video presentation on leasing decisions. I hope you guys are watching this particular video in the best of your health and spirit. And certainly, you guys must have revised the entire amount of topics, the number of topics that we have already covered in our first presentation relating to the topic of leasing decisions. I hope you guys are honoring your word on that particular parameter. Perfect, guys. With that hope and belief, let's mark the beginning of this wonderful presentation and let's have an idea about different related topics with the topic of leasing decisions. The first one is going to be what needs to be the lessor's evaluation of leasing versus lessee's evaluation of leasing. Let's suppose I am the person who is the owner of an asset and I want to provide this particular asset to a lessee on rent for in consideration of the lease rentals. So what all parameters do I need to look up to in order to ensure that I land up in a beneficial position? That is something that will be covered under lessor's evaluation of leasing. So guys, lessor is that person who's actually going to provide you the machinery or your equipment for use. And generally what happens is lessor is the leasing company. That is, Reliance is one. There are n number of leasing companies available in our nation. Their main purpose is basically to provide you all the requisite amount of finances and all the requisite amount of those machineries, those equipments with which you can carry out your business. And in consideration of the same, you as lessee provide them the leasing rentals. So what all things do a lessor, that is the leasing company, needs to take into consideration in order to ensure that they actually get the benefit out of that leasing contract or leasing agreement. Number one, they should be aware of one particular thing, guys. If you are basically providing some asset or some equipment or be it your machinery on lease, you need to ensure that your income as a lessor, whatever kind of lease rentals that you will get from a lessee, all these lease rentals are taxable. Remember that. So you need to take into account the taxation part, which forms enormous amount of the thing under your purview, which needs to be taken care of. Bigger companies, bigger leasing companies, they'll be like straight away taxed for 30%. So 30% is something which amounts to enormous amount of money, guys. We are not talking about small basic amount of money. 30% is a huge amount. So huge chunk of money you need to take into consideration in a most important way. Number two, lessor basically is a person who is the owner of that asset. Since lessor is that person who is the owner of the asset, he has actually transferred the asset to lessee. However, having said that, he is still the owner of that asset. The entire risk and rewards may be transferred to lessee, but he is still the owner of the asset. And being the owner of the asset, you will get that depreciation tax shield. You are entitled to provide for the depreciation in your books of accounts as a lessor. Lessor will remain the owner of that asset, and certainly they can reflect the same in their books of accounts and charge depreciation on it. What's the benefit of charging depreciation? Depreciation is a tax deductible expense. So certainly you'll get an advantage as a lessor if you are providing the asset on lease to the lessee. Third, lessor is a person who is going to be in charge of availing the salvage value. Let's suppose I have an air conditioner of let's say 25,000 rupees. That is a single air conditioner. There is an office which is about to set up in my nearby premises. They approach me and they ask me, "Sir, we would like to have 100 air conditioners from your company. Will you be able to provide them on lease?" I say, "Definitely, go ahead with it." After a span of 7 years, the salvage value of that particular AC, one AC, will still remain as 4,000 rupees. So who is actually the person who is entitled to those 4,000 rupees? None other than me. Why? Because I'm the owner of that asset. And since I have provided that particular asset on operating lease basis, I am entitled to charge for that salvage value. So again, this is going to be my income because I'm the owner of that asset. Lessor will remain entitled to salvage value. Lastly, lessor undertakes many expenses, guys. remote expenses, maintenance expenses, repair expenses for all those machinery, those equipments that I have provided on lease to you as lessee. I am still gonna undertake all those expenses. So since I'm gonna undertake all those expenses from my side as well, this is gonna be my tax deductible expense, and this will help me in lowering my taxable income. So certainly this is something which needs to be taken care of under your purview, because you are going to be the lessor in this particular case and you are the owner of the asset. So all these things will be taken into your consideration. Now think about, guys, if I tell you that I need to take into consideration this fact that what should be my criteria in order to take care whether I should go ahead in providing you the leased asset or not. Number one, I need to take into consideration number one thing, that is my cost of asset. What is actually my air conditioner's cost? It is 25,000. Then I should take into consideration what is the present value of all the lease rentals that I'll take out of your pocket and put it in my pocket as my income. Present value needs to be taken care of, because finance main thing is present value reduction. Guys, do take care of this thing. It is always on discounted values. We are not supposed to take care of the future values with respect to their exact amounts. We are basically taking into consideration only their present value, because that is how I will be able to relate whether I should go ahead today or not. Number third thing will be the present value of the depreciation tax shield. I will deduct it from my amount. Why? Because I am getting the benefit of it under my accounts. So certainly that will not be my cost. It will actually save my cost. So cost of asset will be added with the amount of present value of all the post-tax expenses. Let's suppose I'm incurring any of the post-tax expenses, be it your repair, be it your maintenance. All these things will be added to the cost of asset. Again, because I am shedding some money out of my pocket. So should I charge it from the customer? That is my lessee? Absolutely. I'm entitled to charge all those expenses, be it your cost of asset, be it your post-tax expenses, whatever I'm incurring on that particular asset, be it your machinery, be it your equipment. I am entitled to charge all these expenses out of the pocket of a lessee. And that is the same thing which I will do. Cost of asset plus all those expenses. Out of the same, I'll deduct the kind of present value depreciation tax shield that I'll get the benefit out of it. I need to deduct it because I'm not incurring any kind of cost of it. I'm actually getting the benefit out of that depreciation. So I'll deduct the same for it. And apart from that, any kind of salvage value that I'll be like able to recover once the asset becomes condemned. Then, which I earlier told you in example, that if I'll be like selling you the air conditioner after a span of 7 years, say down the line, I'll get a salvage value of 4,000 rupees. Again, the same should be deducted out of the same in order to reach to the conclusion whether it is profitable for me to go ahead with this particular agreement or not. These are the major four things that needs to be taken into consideration: cost of asset, present value of post-tax expenses that you'll be incurring, present value of the depreciation tax shield, and the present value of all the salvage value. These four things will be taken into consideration, and that should come under your purview to necessarily evaluate as a lessor that whether you should go ahead with the leasing or not. I hope each and every stuff that I told you up is absolutely and crystal clear to you guys. Perfect. Moving on to the second part, which is the lessee's evaluation of leasing. But, guys, before doing and going ahead with lessee's evaluation of leasing, I would like to share some of my views on lease versus buy. This is something which is very, very important for you to understand. Why are we really going ahead with leasing decisions and why not buying decision directly? Lease or buy, it is something as a very crucial topic to understand. Why should a person go ahead with buying decision and why should a person go ahead with the leasing decisions? This is something which comes from old school, guys. This question is not for now. This question has been like approaching in all the finance books, be it your foreign books, be it your Indian books, all the way around, because this is something which is a general problem for many enterprises. They always get into the perplex whether they should go for a leasing option or buying option. If in case you are enormously cash rich company, you're already having cash in your hand, buying is definitely not a bad option in certain cases. But having said that, you need to take into account the opportunity cost. What if you would have or you should have invested the amount with which you're buying and rather resorted to lease? What good amount of money or what good amount of investment would have made if in case you would have gone for leasing option and saved that money rather than buying directly? This is something which needs to be taken into consideration each time you have been asked with the thing whether we should go for lease or we should go for buy. Remember guys, always think on the parameter of an opportunity cost. If you are not an enormously cash rich company, the this question is actually out of your purview. Definitely you will have to take up an option of lease only. Why? Because you can't afford to buy it with an entire amount in one go. But if in case you are having good amount of money in your pocket and still you will be like confused with the option whether you should go for a lease or buy, always think on the opportunity cost. Leasing will provide you enormous amount of benefits, be it your taxation benefits, be it your depreciation benefits, be it your repair and maintenance benefits, be it your opportunity cost that you are not supposed to provide them all the entire money in one go. It has definitely got its advantages, but you need to take it on the parameter of opportunity cost. Stick to this particular word and you'll never fail in your examination, be it your life examination. Opportunity cost is something which is extremely enormously important for you guys to understand. And it comes not just in finance but in life as well. I hope it's clear with you guys. Perfect. Now let's move towards the next thing, which is the lessee's evaluation of leasing. Why I should go ahead and think about evaluating on lessee's behalf. Now, think about same example. Now, I'm the lessee. Okay, I'm the person who is gonna take that particular asset on lease. I'm supposed to provide the lease rentals now. Okay, what if I need to decide whether I should go for leasing or I should go for borrowing? This question is again a very important thing in, and you need to consider this thing whether you should go for a leasing option or you should go for a borrowing option. It depends on a different parameters. Let's suppose if I as an investor, okay, I'm actually acquiring asset on lease basis. Let's understand what are the benefits and what are the things that I need to understand and keep in mind if in case I'm going for a leasing option. Number one, I will be supposed to pay the lease rentals, okay, and all those lease rentals are tax deductible. Good thing for me, I can show the same rentals which I am paying to the lessor in my books of accounts in my P&L account. Having said that, I won't be able to show the asset in my assets column. Basically, it will be an off the balance sheet asset. Why? Because I cannot charge depreciation on that asset. Since it's an operating lease, still the owner of the asset is the lessor. So I can only charge those lease rentals which I'm paying off in my P&L account, and the same are tax deductible. Number one. Number two, being not an owner basically and only a user, me, I cannot be entitled to the tax benefits of the depreciation that I'm told you. I actually told you this thing. So I won't be allowed to get the benefit out of that depreciation, and the same, I won't get the taxation benefit out of the same as well. Number three, that I cannot earn any amount of money on behalf of the salvage value. So whatever the thing and whatever the amount I get out of while selling off the asset in the market in the later end, I need to pay that particular amount to the lessor. I'm not supposed and I'm not entitled to receive that particular amount. Number three. Number four, any kind of expenses that I'm directly incurring on the use of that equipment, these are also tax deductible. Let's suppose I acquired an asset from the lessor and I'm using it under my premises. I'm already paying the lease rentals. Somehow, some kind of repair and maintenance actually arose. Okay, and I shed my pocket. I spent some amount of money on that particular machinery's improvement. Then, what all expenditure I'm incurring, that is tax deductible. I can show off the same in my profit and loss account, and I'll get the benefit of tax deduction out of it. This is something which I need to consider if in case I'm going for leasing. Now, coming to the second part. Let's suppose what if I go for borrowing? I decide that I should go ahead with borrowing option rather than going for leasing option. Then what all things will come on? Number one, I would be liable to pay an interest. Since it's a borrowing option, I would be liable to pay an interest. And again, the same would be tax deductible. Just like lease rentals, this will also be tax deductible. Now, here comes the catch. Then what is the actual benefit of going for the borrowing option? Since in borrowing option, the machinery or the equipment belongs to you. You are the owner of that asset. So in that particular case, you'll be able to charge your depreciation and get the benefit out of it. Once you charge your depreciation, depreciation is again a tax deductible expense that is gonna decrease your taxable income, and you will actually be supposed to pay less amount of taxes. That is the best part of borrowing option. Number three, since you are actually again the owner of the asset, so whatever amount that you will get once the asset is being sold after getting condemned, that salvage value will go in your pocket. Apart from that, any expenses which are directly related to the use of that particular equipment, again that will be tax deductible, and again you can get the benefit of it while you are paying off your taxation amount. So these are the basic two considerations which you as a lessee, that is because you are procuring something from the market as machinery or equipment, you need to consider whether you should go for leasing option or you should go for borrowing option. I've already stated you and made you understand the kind of criteria that you should look forward to while deciding on both of these options. Perfect, guys. That's wonderful. Now, moving on to the second topic, which will be evaluation of the lease methods. There are three methods which I'll be like telling you of. Number one, present value analysis. Number two, internal rate of return analysis. And number three, Bower, Herringer, Williamson method. These are the three methods. The most likely and the most prevalent method which is available in the market is present value analysis. This is nothing but you need to consider that what is the amount that you need to pay as lease payment after you get the benefit of annually tax adjustment being done, and what is their present value. You need to compare the same with the kind of repayment amounts which you are making if in case you have gone for borrowing option, and the same would be after adjusting your tax amounts, and that too on depreciation, your interest, whatever things you are paying off, and the kind of alternative, that is your lease rental or your borrowing rentals, whichever would be lesser, whichever would be like involving lesser amount of cash outflows will be chosen. So this is something about the present value analysis. Next comes in the internal rate of return analysis. Internal rate of return basically is a rate at which the lease rentals net of tax shield on depreciation are equal to cost of leasing. Now it is basically about, guys, in order to ensure that we get the perfect figure for it, all we need to take care is of zero. My thing should be my LHS should remain equal to RHS. LHS will always remain the cost of leasing, the cost of equipment, the cost of thing that I'll be needing. Whether I am able to extract the same amount of money, let's suppose the machinery cost is 5 lakh rupees and my lease rentals is like 40,000 rupees, and out of the same tax deductible expenses, other things, all these things will be like taken into consideration, and all these things whether at what particular rate of return should be equal to 5 lakh rupees, that is gonna be my internal rate of return. That will be used under this particular segment which is called leasing decisions. Lastly, Herringer Williamson method. What happens with Bower Herringer Williamson method? I'll better call it as a BHW method. That will be actually a simpler one. Why? Because it's a pretty like difficult kind of a name, Bower Herringer Williamson. Pretty cool, but still we'll stick to BHW method. That will be far more better, guys. BHW method basically segregates your financial and your tax aspects on lease financing. What they basically say is you need to compare your present value of the debt, that is the borrowing amount you are taking, with the discounted value of your lease payments. If in case would have gone for lease rental rather than going for the borrowing option, then what would have happened? You need to compare your present value of both the cases. NPV, again, the first thing which we noted, NPV is basically the financial disadvantage over here if in case we get the figure as positive rather than negative. Then we need to work out on the kind of comparative tax benefits that we'll get during the period with the help of a discounting method. Discounting rate will be like the appropriate one, which will be like already given to us in the question, or we need to figure it out. That will depend once we start the marking of the question segments. And don't worry, guys, I am telling you this thing. All these methods will be like used. I'm not gonna surrender. I'm not gonna allow you to solve these questions alone. I have already taken up your responsibility. Don't worry. N number of questions. Plenty of the questions are waiting for you. Already prepared the presentations, next 7 presentations, and all those will be solely dedicated to the kind of questions which have already come in the previous examinations. So a lot many questions are waiting for you. We'll be discussing each and every question and we'll be completing it down the line so as to ensure that you guys get 100% clarity in each one of them. All these methods, present value analysis, uh, IRR analysis, Bauer, Herringer, Williamson method, all these things will come into the consideration. Don't worry, just stick to it, understand the evaluation method, and we'll use each one of them in our questions. Perfect, guys. Let's move towards the next thing. The next big thing of this particular segment will be cross-border leasing. Cross-border leasing, guys, just think of this thing, cross-border. The name itself is very much clear. At what point of time will you call a leasing as cross-border? It is only if in case the parties to the leasing agreement stay and put up in two different countries. Me in India as lessor is providing something to someone in England and he or she is the lessee over there, then what's going to happen? It will be considered under cross-border leasing. This question has already been asked in CA Final November 2008 examination. Cross-border leasing, guys, is a leasing agreement where lessor and lessee are situated in two different countries. This raises significant additional issues relating to tax avoidance and tax shelters. I must tell you guys very honestly, we are having a pact with Mauritius, and that is one of the classiest pact one can have, okay, between these two countries. Enormous amount of money from India is being sent to Mauritius, and the same is under the purview of tax avoidance agreements, various tax avoidance agreements. Have you heard about this term hawala money? Hawala money is nothing but basically laundering amount. There is a particular act which is called as Prevention of Money Laundering Act. We have also covered the same in our CA Final Law series. If in case you haven't watched it, go and watch it there itself. You'll get to know what kind of things usually happen in that particular act, and it's been mentioned clearly over there itself. So, coming back to the cross-border leasing, it is basically again a leasing arrangement which happens between two of the participants in two different countries. Tax avoidance and tax shelters would be taken into consideration of this, including all the hawala money which usually happens. So, our government basically keeps a good eye on each and every kind of cross-border leasing which is happening because it's extremely important. Next comes in what all are the objectives? Why people usually prefer to go for cross-border leasing and rather not go for the in-house leasing which is available within the country itself? What all are the benefits? Think about it. You'll get the answer yourself. What could be the best benefit? Obviously, tax avoidance, tax shelters. You are actually able to reduce your amount of taxation amount. That is the most important benefit you get out of cross-border leasing. It reduces your overall cost of financing through utilization of by the lessor of tax depreciation allowances to reduce its taxable income. Why Modi ji is promoting FDI, Make in India? What all are the benefits are they giving to the persons who are based out as NRIs? So this is one such thing. Basically, reduction of your taxable income on the basis of tax deductions that they are giving. Number two comes in the lease is basically utilized to finance a substantial position of portion basically of your equipment cost. Again, the same could be like obtained from cross-border leasing. Debt is basically secured usually by mortgages and assignment, wherein the same is being provided. And depending on the structure, the lessor can utilize very favorable leverage lease. Remember, guys, I told you about leverage lease in my first presentation, wherein that third party is also involved, which is the lender. That is a person, that is the bank which usually finances for that particular asset. So the same can be taken care of in cross-border leasing as well. Let's suppose I'm in India and I contact my bank as HDFC Bank and I'm supposed to provide the asset to a person based out in England. That person will also contact HDFC. Then what's going to happen? HDFC will be taken care of as lender in that particular case. So That will also be helpful in case of leveraged lease too. Then, in some of the countries, it is very easier for a lessor to repossess the leased equipment following if in case lessee defaults. Let's suppose that person based out in England is just not able to provide me back that asset or that particular amount of lease rental. So what's going to happen in this particular stuff? HDFC and HDFC is gonna be like taking care of this thing that the same property gets cleared off, and they'll keep it with themselves, and they'll clear off their dues accordingly, because the lessor is basically the owner and not just merely a secured lender in that particular case. So this is again a benefit of involving a leveraged lease rather than going for a normal cross-border leasing. Involve a party just like bank, bigger banks, HDFC, ICICI, Deutsche Bank, any other bank, and they'll take care of you as an owner and not just merely a secured lender that way. And leasing provides the leasee 100% financing with leverage lease. So all these are the benefits of entering into a cross-border leasing. I hope you guys are pretty much clear with each and everything that I told you with regarding cross-border leasing. Perfect, guys. Let's move ahead with the last topic of this particular presentation and also the last topic of this chapter. Post this topic, once we'll be like entering into the next presentation, n number of questions are waiting for you guys. Just kill it, man. Perfect. Differences. What all are the differences between lease and hire purchase? You guys must be like pondering about this fact. Sir, aren't these two terms like quite synonymous to each other with way leasing is also same, hire purchase is also? No, there is a difference between two guys. What happens in hire purchase transaction is the person who is using that asset on hire purchase basis is the one who is the owner of the asset. If in case let's suppose I enter into a hire purchase agreement with a person, another person. Once I enter into a hire purchase agreement and I obtain that asset from him, then I'll be the owner of that asset. Okay, and the full title is transferred once I have paid all the installments. What's the benefit of being an owner of that asset? The only benefit will be like I'll be able to charge the benefit of depreciation. I can claim that depreciation by showing that asset in my books of accounts while providing for the computation of my taxable income during the currency of that hire purchase agreement. Wonderful benefit that I'll get in case of hire purchase agreement. Whereas what happens in a lease transaction, the ownership of the equipment or asset still rests with the lessor. The person who is providing me the asset is gonna charge depreciation for it, and he is the one who is entitled to show the asset in their books of accounts. I won't be the one if in case I am taking up that particular asset on lease basis. Lessee, that is me, will only get the benefit of using that asset. That's it. Depreciation on the asset will be claimed by the lessor, and asset is shown in the balance sheet of the lessor, not mine. This is going to be the difference between lease and hire purchase. Lease money paid by the lessee can be charged in his books of accounts, that is via P&L account. That's it. The assets will not appear in the balance sheet of the lessee. Such asset for lessee will be called as off the balance sheet asset. I hope you guys are pretty much now clear with the kind of difference it lies between lease and hire purchase. So this presentation was wonderful. Good. Do give us a thumbs up. Keep liking, keep sharing our work. If in case you have liked this video, keep sharing the same with your friends. Of course, they also need the same kind of guidance like you. They also need the same kind of knowledge like you. So spread that. Spread the knowledge as much as you can. And we would love to cater you awesome services all the time. Thank you guys on behalf of Edupedia World. If in case you have liked the video, do give us a thumbs up. That's it. And keep revising the topic, guys. This is something which I always ask you for, and I will always ask you for this thing till the time I complete my course. Stay connected, guys. I'll take care of you in your next presentation. Till then, sayonara, God bless, good night. Bye.